Did you know that options trading is responsible for over $20 trillion in daily trading volume? That's more than the combined value of the world's top stock exchanges. Yet, 95% of retail traders lose money in the long run. Shocking, right? If you're feeling curious but hesitant, you're not alone. Many people think options trading is too complex or risky, but the truth is, it can be a powerful tool when used correctly. Imagine having the ability to profit whether the market goes up or down. With options, that's exactly what you can do. In this guide, we're going to strip away the confusion and break down the essentials. You'll discover strategies that even beginners can use to gain an edge in the market. From the simple to the advanced, we'll explain everything clearly, using real-life examples and easy-to-understand language. By the end of this guide, you'll be ready to dive into options trading with confidence. Stick around, because you're about to uncover how options could change the way you approach investing, whether you're aiming for extra income or simply looking to protect your portfolio. Chapter 1. What are options? An option is a financial contract that gives you the right, but not the obligation, to buy or sell an underlying asset, like stocks, at a specific price within a certain time. There are two types of options. Call options gives you the right to buy the asset at the strike price. Put options gives you the right to sell the asset at the strike price. To put it simply, a call option is like reserving the right to buy something in the future at today's price. A put option is the opposite. You're reserving the right to sell something at today's price in the future. Chapter 2. Key terms you need to know before diving into options. It's essential to understand a few key terms. Strike price, the price at which you can buy or sell the asset. Expiration date, the last date the option is valid. Premium, the cost of the option. In the money, ITM, when an option has intrinsic value. For example, a call option is ITM if the stock price is above the strike price. Out of the money, OTM, when an option has no intrinsic value. For example, a put option is OTM if the stock price is above the strike price. At the money, ATM, when the strike price is equal to the current market price of the asset. Understanding these terms helps you better evaluate an option's potential profit or loss. Chapter 3. Basic strategies, a simple overview. Now that you understand the basic concepts, let's explore some easy strategies for beginners. These are low-risk ways to start using options. You can start practicing these strategies in a demo account before trading with real money. Don't forget to subscribe for more strategies and detailed explanations in upcoming chapters. Chapter 4. Advanced strategies, maximizing your profits. As you become comfortable with the basics, you can explore more advanced strategies. These techniques are designed to take advantage of market conditions and potentially deliver higher returns. Advanced strategies carry more risk but can provide greater rewards. Always test these on a demo account first and analyze market conditions. Stay tuned for more in-depth tips on managing risks and boosting returns in future chapters. Chapter 5. The risks of options trading. While options trading can be profitable, it's not without its risks. The most important thing to remember is that options expire. If the stock doesn't move in the direction you hoped, your option could expire worthless, and you lose the premium you paid. Another risk is leverage. Options allow you to control a larger amount of stock with a smaller investment, but this also means your losses can be magnified if the trade doesn't go as planned. The key to minimizing risk is to start small, use strategies that limit potential losses, like the protective put or iron condor, and always have an exit plan. Chapter 6. How to get started with options. To get started with options trading, follow these steps. Options trading doesn't have to be overwhelming. With the right strategy, it can be a great way to enhance your portfolio. Subscribe for more detailed insights and strategies in the next chapters.